Hello everyone, welcome to the first video of the mini-series analyzing transactions. Today I'm going to talk about accounts, chart of accounts, and account category. The first concept that I need to explain is the concept of T accounts. So every time there is a transaction, we need to show the increase and decrease in each accounting equation element as a separate record. And this is the definition of what an account is. An account will register the increases and decreases regarding each transaction we have. And for the ones who don't remember, the accounting equation is assets equals liabilities plus owner's equity. All right. So a T account basically is an element that we can use to register and keep track of our different accounts. And it will look like this. First, we draw a T, just like you have on the right hand of the slide. And then on the very top, we put the title or the code of the account. And then the left side, we know it as being the debit side, and the right side, we know it as being the credit side. When I was a student, I used to have difficulties remember which one is debit, which one is credit. So the trick that I used to do is I always associated the accounts with Washington DC, because if you think about DC, then DC debit credit, so debit on the left, credit on the right. I know it's a stupid trick, but if it helps you to remember, perfect. Okay, now typically, or most definitely, most of the accounts you're going to have is one of the sides will be bigger than the other. And that means that you're going to have to calculate for each one of the sides how much bigger it is. And we call that a balance. But I'm going to tell you later on how to calculate balances is just an element of the T account that for now I need to explain. So a couple of documents that we're going to learn now is the concept of ledger and the concept of chart of accounts. So a ledger, it will be a group of different accounts, okay? And a chart of accounts will be the list of the accounts that are on the ledger. As an example, the table you see on the right is a ledger, and we would have one table like this for every single account that we have to use in the company. Now I just want to show you the example of what a chart of accounts would look like. As you can see, it's basically a huge list where we have the different types of accounts, okay? And the chart of accounts basically has on the first column we have assets, cash, so we have the description of all the assets we have. This is a variety of accounts. Many of them you're not going to need, but many of them are very commonly used. Then we have the account code. Each account will have a different code, typically to a third level, so 3 numbers associated. And this is important because later on, instead of writing, for example, on the accounts, the whole name, you can just put the code, and it makes it a little bit easier. Balances, on the other hand, it's just to tell you what is the normal balance of this account. You see, an account will always have a balance of debit or a balance of credit, and this account tells you what is the traditional one. So as you can see, assets, for example, typically have a debit balance, while liabilities and owner's equity, most of them have a credit balance, as you can see. In the file that you can find as well in the description below of this video, I separated it into different tabs as well. So here we have only the level 0 accounts, so only the main categories, and we see the 8 main categories of accounts: assets, liabilities, equity, revenue, expense, and then we have non-operating income and expense, taxes and other than income, and income tax expense, for example. But typically we're only going to use during this course these 5 accounts, the top 5. Level 1 is a little bit just more into detail so that you can orient yourself, and level 2 would be all the description. Okay, so this is what a chart of accounts is, and I strongly recommend that you keep this in hand, because it's something that we tend to use a lot when learning accounting, to go back and forth so that we know the codes and we know the category they belong to. So accounts follow a certain order, and typically what would happen is we organize the accounts according to the order that they show up in the financial statements. The first financial statement we do is the balance sheet, and the balance sheet is organized first by assets, then by liabilities, third by owner's equity. And then the document we would do next is income statement. And in the income statement, so the first thing that shows up, in other words, our fourth category would be revenues, and then it would be expenses. So in terms of the balance sheet, it means that we would have the assets on the left, the liabilities and owner's equity on the right, and the income statement shows the revenues, as you know, first, and then it would show the expenses later, and that we use to calculate our net income. So we organize the accounts in the same order they show up, and that helps us to remember, for example, what is the first digit of the account number that we need to use, for example. And so to summarize, I just gave you a quick introduction, some important topics to remember, some of the definitions that we're going to need in the next videos, and what is the order of the accounts. Remember, assets first, then liabilities, owner's equity, then revenues, and finally expense. Thank you very much. Let me know if you have any other question on the comment section below, and I'll see you on the next video.